Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar slide extends into the 8th consecutive day. As we can see, the market has now reached its objective of 64.5. With that, we've actually posted a fresh 1 month low, which is at 64.27 this morning. From that, the market is extremely oversold. However, the ADX is still supporting somewhat a bearish trend that could see an extension now towards 64.15 and reassess. I'm a little bit wary at these levels as the bearishness has weighed on the market and now could actually pose a threat, that is to a rebound or even a positive path back to a correction that supports the market to 66 cents. Viewing yesterday, the RBA monetary policy meeting minutes showed the statement that the RBA sees a credible path to the inflation target, keeping the cash rate at 4.1%, and reiterated that more tightening may be needed, still depending on data, that is. Still to come though, we've got the US FOMC meeting minutes, followed by that by Thursday's data for the Australian employment change and unemployment rate. While elsewhere, the economic picture for China continued to deteriorate after a surprise interest rate cut by the country's central bank. Cuts to China 1-year loans to financial institutions by 15 basis points, and the largest since the outset of the COVID pandemic. Reason behind that is the showing industrial output and retail sales growth slowed from a month earlier to a year-on-year pace of 3.7% and 2.5% respectively. So therefore, keeping an eye on the Australian dollar. As I mentioned, we are extremely oversold and therefore does potentially expect a rebound. Viewing the euro, the market remains somewhat weak, and also from a surprise release of stronger than expected US retail sales, which has given some concerns that the US Federal Reserve may not pause its interest rates this year and therefore could see, depending on the meetings from September or November, of a possible 25 basis point rate hike. According to the US Comments Department, the US retail sales increased by 0.7% in July, ahead of 0.4% forecast. The dollar index, meanwhile, is still holding relatively firm around 103.12. So still keep an eye on Thursday for the US FOMC meeting minutes. In light of the pattern for the euro, the market is likely to still test lower and look towards 108.60. But I am getting a little bit cautious that beneath there and towards 107.75.85 could see a bounce. So I'm not going to get too bearish as we get closer to the bottom side of the range. Viewing the top side, resistance comes in around 109.40 to 109.80. On the dollar yen, the market still remains somewhat firm, and since the break of 145 figure 40, the market is looking or destined to challenge that area around 145.95. But I would like to point out that I am neutral due to the fact is that we are overbought. But for those wishing to trade, we still can see an extension on towards 146.5 to 148, but the journey would likely be much to a bumpy ride. And therefore still keeping an eye on the overbought indicators, if therefore could see a pullback to around 144 or maybe even lower to around 143. Viewing the sterling, the market remains somewhat to a lackluster picture, as we can see here that the sideways pattern is still looking for direction. However, in light of the RSI picking up relatively well along with the MACD, I view the market could actually stage a rise up towards 127.80 to 128.20, a key point, and if we see a break there, could extend further on towards 130. I'm not getting too bearish, closer to the bottom side of this 126, and could see the rise. Looking at gold, the market posts a fresh low at 1,900 in light of the pattern, still can actually see further threat down towards 1,850.70, and with light of the trend being relatively strong to a bear case, could see that picture unfold. Any upside attempts looks to around 1,909 to 1,918 as a good supply area. Wrapping up with oil, the market continues its downward trek and now taking out the level that was at 81.70, now exposes a region of 78.80.90. With any upside attempts should find a cap now around 81.10.20. Well, that's a wrap. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day.